Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up for this Friday, the 25th of November, 2022. And here we are about 6 p.m. Friday night. All right. So we look at the market. Interesting week. We saw the Fed minutes, and it did pretty much what we thought, at least what I thought. And that is that the Fed, there's an argument about backing off from 75 basis point hikes. That's the slowing down. When they stop raising rates is still very much open in the grammar, and you can't quite tell that. I think it's going to be all data dependent. The market will wait. I think that you can lock in the idea of a 50 basis point rate hike, assuming before we get to the FOMC meeting at mid-month that the data that comes out for the jobs data and CPI are where they were or slightly softer. A stronger piece of data could upend all this. A sharply lower reading in both could also mean, instead of a 50 basis point hike, a 25. I happen to think everything's in play. And I think that that's how you approach the market. Now, we have not gotten any information out of the European Union on a price cap on Russian oil, but we have heard that there's now a presidential decree being drawn up that anyone that joins in on a price cap, whatever the numbers come out to be, will not be sold Russian oil via traders, the companies, whatever's going on through there. Russia will turn its attention to China, India, Korea, blah, 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 and work with all those partners, Turkey, in selling their oil. Okay, we'll see how that goes for them. Just remember, Russian oil is trading at roughly a $20 to $25 discount right now to Brent. So that means you're around $58 a barrel. But, you know, they can produce it for, it's estimated, near $20 a barrel. So let's take a look and see what we have on the charts. First off, we're still very much in what I'll call, on a monthly chart, a bear market rally that could go back to the 42-48 level. On the weekly chart, you're sitting here at 40.32. There's been a lot of talk of the 4,100 level in the S&P being the next upside target. The momentum is up as the market is staying over that number. For the week, it gained 1.5% roughly. You can see that you're pretty much caught between here down to here. You've had a nice bounce. The swing line pattern, though, is still one of lower highs and lower lows. Now, that will change if the market can take out just this week's high, which would then give you higher lows. But what's really needed to be taken out is 40, 50, 75, which would take you to 40, 51. And that would then give you the pattern of higher lows, higher highs, at least at the moment that that takes place. Whether that would hold into the week, well, it may not if you had a big reversal, but that's how the pattern would be. You're over the 18-week average, so the bias is up. In terms of moving averages, the next major resistance is 41.93.90, let's call it. And the Bollinger Band is coming in near 43.39. Momentum still pointing up. Bias up, momentum up. The swing line trend is down, and that changes if you get over 40, 50, 75. When you come to the Dow Jones, we have week after week. What is it? 7 weeks in a row of higher highs each one of the weeks. Okay, your momentum is still pointing up, not embedded. I think you'd have big problems in the market wherever the Bollinger Band sets in. And I'll be surprised if the market finds it easy to just sit here week after week going into the FOMC meeting over the 33,400. Am I bearish? Absolutely not. That's not what you're hearing from me. I'm looking for pullbacks. As you know, in my reports that I put out, I am still looking for the Santa Claus rally, which carries often to about mid-January. It is not from Christmas Day. It's a move that can carry into mid-January. Then I think the market will have problems because you have to go back to how the corporate earnings are looking, what the Fed decides to see or what they decide to do off the data that's coming in, how strong or weak the data is. There's another phase coming at the market very quickly. I don't think traders are ready for that phase just yet. In the NASDAQ, the resistance is crystal clear. It's the 18-week moving average of closes, momentum up, bias up. You need to get up, take out 12,118.75, close over the 18-week average, and that could give you a market that starts looking interesting coming up here. The problem is, and there's a big problem, the tech stocks are not going to stay in favor. I don't see anything that's going to change that in the near term. Therefore, this could be a trap on a rally that comes up. Could I be wrong? I certainly could, but I think that's what it would be. I think it'll be more pulled along than the leader of the market. The Russell's interesting. It's tried to be a leader a couple of times this year. It would have to get over last week's high, which would carry the market. Let's see if I can bring that here for you, too. I think I can. There we go. That would take the market to 1913.30. That's the number that's got to be violated in there. That would then turn the trend up. But the leader is very clear. It's been the Dow, 7-week, almost 2-month leader in the market. How much more will it want to lead, and at what point does it get a little bit ahead of itself and run into the headwinds are the questions. In the bonds and notes, you've lost the bearish embedded readings. I could make an argument that you get up to the 18-week average of closes in both before you run into serious resistance in them. In the dollar index, down. So I'm not in the camp where so many traders are bullish. I admit the market has overdone it a bit. It either embeds or it's going to run out of some steam here. Most likely, if it makes a run to the 104 level, it'll find some footing, especially in front of the 2-week period, in front of the FOMC meeting. Eurocurrency's the flip-flop of it, and it's run into the resistance the buzzsaw at the upper Bollinger Band. Momentum up, trend up, bias up, but you've hit a strong resistance area in the market. The Canadian dollar had a bear market rally that carried to the 18-week average of closes. Keep saying day, we're on weekly charts. And that's where the resistance is. This market gets friendly on a close over 75.12, let's call it. Japanese yen, the battleground has been going on now for nearly 2 months. The marketplace, not the Bank of Japan, called the market bottom. It's driven the market up. The question is, can it hold on at these levels? So far, the news that I'm seeing out of Bank Governor Kuroda is he is not changing his tact on the market just yet. We'll have to see what happens, or if he leaves office, I guess. In Bitcoin, give Bitcoin a little bit of credit. It's not falling apart with everything else that's going on in this sector. On the other hand, there's nothing bullish about it. I realize you've got people picking bottoms here. I wish them the very best. You know, this market was a $69,000 market this year, and the market is now sitting here at $16,500. So it's only lost $53,500 of value, which is about 80% of its value, and I understand the bottom pickers will come out. My dilemma has been, continues to be, I don't know what you do with Bitcoin other than you speculate with it. I have not seen where it serves a purpose other than speculation. And I know I'm going to be attacked for that, and that's fine. I still don't see it. I go to Starbucks and I've asked the baristas, have you ever taken a Bitcoin? No. I don't know anywhere that takes a Bitcoin that you can shop with it. So it's a speculative value. Blockchain, I believe in immensely. I just don't understand these cryptocurrencies, and I question their value altogether. And certainly this last ringing out will take out a lot of players. In the differential between Brent and WTI, you know, this is all going to be looking at what happens now in Europe. What number are they going to set to join a cap price? And when they do, what's the reaction going to be from Russia? How's that going to all play out? You're down to the 100-week in the lower Bollinger Band. Momentum down, no trend. Are you going to go into a free fall to the $70 area? If you do, that'll probably carry with it WTI. And then the question for the market, at what price does the U.S. start buying oil? And we'll see it in the market for the SPR, to return oil to our strategic reserve. Given that you're at 76.28, the Biden administration said it would be under $72. So if that is the case, you get a $4 drop from here, which could carry then to that number. That's where I'm expecting they'll show up, and that's where I'd start looking for a floor to come into the market. So the combination of what happens with Europe, take it down. We see that. It's an interesting time in oil. Don't forget that. Gasoline, well, it's not going to stand up against all this, so we could slip back, and it's wintertime. You don't have that big of demand. Could it be headed for the $2.11, the $2 level? It could. Now, if these markets go there, you know what happens. That takes down the inflation reading. And if that takes down the inflation, the CPI, that helps the Fed pivot earlier. These are all good things if that happens for the U.S. economy. So you put it together and you say, whoa, interesting week. It was basically a 3-day week. You have to see what you're going to do and how you're going to do it with the marketplace. I want to remind you, we have a lot of information for you. This is what you get from Linn. We give you a 2-week trial to our research, and it covers all these markets: energies, financials, the soft markets, the grain markets, both from an option point of view, a fundamental point of view, a spread point of view, a futures point of view, and a cash point of view. So we cover them all, giving you full stories each and every day. What are the traders doing? What are they saying? What's showing up in the futures markets? We dissect it. Probably 50, 60 stories a day, but you can narrow it in to the ones that you want by the different sectors. We'd like to show you what our traders see from us, and I think you'd find it pretty interesting. So how do you get this? Well, it's simple. You either go to our website at iraepstein.com and you go on the top left to the free offers. You can click up here at any time. There'll be an icon. Just give it a click, or you can call my staff. I'm Ira Epstein. I'll see you all come Monday. Have a great weekend.